What is up, everybody? Welcome back to Bitcoin and Markets. Happy Monday. Hope you had a good weekend. It is Monday, so we are going through the Bitcoin Fundamentals Report. It's a free weekly newsletter over on my website, bitcoinandmarkets.com. Let's share the screen. Bitcoinandmarkets.com. Check it out. You can sign up for the free weekly newsletter as well as ways to support my content over there. I also write on Bitcoin Magazine Pro, so check that out. You can find some of the same content over on Bitcoin and Markets, though. So there you go. Let's see if I have a problem here with YouTube is not live streaming for some reason. Let's check this out real quick before we get going. It's really slow on the backside here. I don't know what's going on with YouTube. Yep, it's not live streaming over there. Let me check my going out channels. It says sending data, but it's not live streaming, so I'll have to fix that after the show. Okay, so bitcoinandmarkets.com. Bitcoin Fundamentals Report number 293. Going in here, quick navigation. So for people new to my content, what I do here in this newsletter is I go through all of these different sections of Bitcoin: headlines, macro, price analysis, mining, and layer 2 in one weekly package. Some of them do get kind of long, like the headline section for today got kind of long because there was a lot of stuff I wanted to talk about. Sometimes it's short. Sometimes the macro section is long. Sometimes the price analysis section is longer. But overall, week over week, this is a very robust place to get information for the Bitcoin industry. But okay, let me zoom in a little bit. And I start everything off with a snapshot of Bitcoin. The weekly trend is weak price, but strong fundamentals. Media sentiment is extremely positive with all the Trump and Biden stuff going on. We'll cover that down below. Network traffic is very low. Mining industry is stable. Weekly price sold off $3,500 week to week or issue to issue for the newsletter here, or 5%, down to 66,482. Let's see. Right now, I'm seeing the price at 66,812. So it has gone up since the time of writing. And we'll take a look at a live chart here in a few minutes in the price section down below. Market cap, 1.3 trillion. Satoshis per dollar, 1504. And one Finny is $6.65. Mining sector. So the previous adjustment was, 10, 12 days ago, and it was less than 1% negative. The estimated adjustment in 2 days' time is less than 1% positive. So mining industry is very stable. After the halving here, there is some miners trying to work through probably some revenue issues at the moment until price starts going higher. But all in all, it is stable. Mempool down from 260 megabytes down to 193 this week. So big decline in the mempool. We'll take a look at that chart as well. Fees to get in the next block, $1.40. That's 15 sats per virtual byte. Low fee or priority fee is, if you can wait an hour or two to get your transaction confirmed, you can get that. You can save 10 cents. Lightning capacity. So capacity went up almost 5,000 BTC, 0.3% positive. However, channels went down by 350 channels. That is negative 0.7% decline. So Lightning Network, I would call it stable as well. It's had some ups and downs in the last few months. Generally, over the last year, it's trended down, but then we had a little bit of a rally in capacity and channels, and right now it's pretty stable, but we will see how that goes. Okay, next section is, in case you missed it, this is all my content that I've produced this week. Bitcoin Magazine Pro, got 3 things out for them. I also am putting that content onto my website with a few days delay, but you can check out that other member content. It's behind a paywall there on bitcoinandmarkets.com. And this is my latest blog post, Demographic Collapse, the Effects of Urbanization. I think we went through that on a live stream, and that was fun to write. I learned a lot by doing it. I think it is important, so people should go and take a look at that article. All right, let's get into headlines. 1 second. Let me check and see if YouTube is now catching up. Refreshing this backside, see if it's working now. Sorry about this. 1 second. It is just like not even loading for me. So I don't know what's going on over there with YouTube. Okay, headlines. Trump reiterates his support for Bitcoin. Quote, I will end Joe Biden's war on crypto and I will ensure that the future of I missed this one, guys. I missed this one. Let me start over. I will end Joe Biden's war on Bitcoin and we will ensure that the future of Bitcoin and the future of Bitcoin. See, why do they have to say crypto and then Bitcoin? They should just say Bitcoin. I mean, I know why they're saying this because they don't want to alienate those Ethereum maxis, right? Or the Solana people that are bag holders of Solana or Cardano or whatever. So they don't want to alienate them, but really they mean Bitcoin. So Bitcoin will be made in America. We're going to keep it right here. And a lot of it is going to be done right here in Florida. He's speaking obviously from West Palm Beach. So very interesting. He is doubling down on his support of Bitcoin and Bitcoin mining. Of course, Biden's team, there was a news leak this week from Biden's team, and he's scheduled to meet with a Bitcoin roundtable. My immediate thought was, they're just thinking about this now. So, tweet here from Nick Can't Mine. Key Biden admin officials are set to attend a Bitcoin roundtable hosted by Congressman Ro Khanna, don't know who that is, in DC, according to a leaked email seen by me. Topic of the meeting, how to keep Bitcoin innovation in the country. I mean, they should have been talking about this for a long time. That's how you know that it's fake, is that just because Trump says it, now they have to look into it. But it also says that Bitcoin is a powerful voter block. Bitcoin is definitely a powerful voter block that everybody wants, and they can't be seen stopping it. That's the whole thing. They can't be seen as getting in the way. 20% of Americans, something around there, is owning Bitcoin or crypto. But yeah, it's a very important voter block. And it's also an important donor block. So people are donating, these big VCs. You've seen some big VCs recently say that they are going to be donating to Trump because of, all of the different things, not just the Bitcoin treatment, but the anti-business type practices from this administration and other things. So they're losing this very important donor block as well, not just voter block, but these big VCs. So very interesting times going on here with Bitcoin. Okay, next headline. T-Mobile is running Bitcoin nodes and plans to mine Bitcoin. Largest telecom provider in Europe, Deutsche Telekom, will begin mining Bitcoin. Quoting from the article, Deutsche Telekom, Europe's largest telecommunications provider, is set to venture into Bitcoin mining. This announcement was made by Dirk Roeder, head of Web3, infrastructure and solutions at T-Systems MMS, a Deutsche Telekom-owned subsidiary, during the BTC Prague conference on Friday. Web3. Puke. Since 2023, we have been running a Bitcoin node, and we are running Bitcoin Lightning nodes as well, he stated. Roeder then hinted at an upcoming venture, saying, and with the heart full of pride, I would like to let you in on a little secret. We will engage in digital monetary photosynthesis soon. I mean, this guy seems like, who says this? Monetary photosynthesis, Bitcoin mining. So there you go. It's spreading. This is not like a energy company. It is not. It is a tech company, I guess. But everybody is getting involved with Bitcoin. Okay, next headline. Central banks are buying Bitcoin. This week, one of the perennial topics in Bitcoin reemerged. Whether or not central banks will or have already been buying Bitcoin. David Bailey of BTC Media claimed that they already are. When pressed, the countries he named were already known. Bhutan, we've known they've been mining and buying for several years, no surprise. Iran, mining and buying Bitcoin have been rumored for years due to the need to get around sanctions, and roughly 4% of the global hash rate is there. Venezuela is another country speculated for a long time to be buying and using Bitcoin. And all of these images usually come from the linked story in the bullet point. Other commentators like Mike Alfred claim to be having talks with countries like Burkina Faso and French Guiana. My take is that the adoption of Bitcoin by these smaller countries and central banks do not have much, if any, impact on the thinking of the larger central banks. So a lot of people think it's a domino effect that Burkina Faso will adopt Bitcoin and that will make the Federal Reserve look into it more, or want to have some first mover advantage. So it's going to make these larger central banks get in. I don't think it has any real impact at all on these larger banks. The Federal Reserve does not care if Bhutan is mining Bitcoin. In fact, it could be a negative, because of those countries are not seen as particularly sophisticated or well run. It is my opinion that larger central banks will not start buying Bitcoin until ordered to by their associated governments, like Trump saying, I want you to get a reserve of Bitcoin. Or RFK has said, I want to have, what was his plan, like 5% Bitcoin reserves or something like that. So they're going to be ordered to do this by their associated governments. The large central banks are not going to be going out and buying Bitcoin on their own. And that's my opinion. That might be close to happening in the US and perhaps Japan. So Japan is also very friendly to this, but we'll see. We'll see what happens with these developments. I just have a bias against the idea of bottom-up adoption. I know that makes that, if I would go back 10 years, I would hate myself, because that is the exact opposite of what I believed and evangelized 10 years ago. But look, if you don't have two pennies to rub together, you're not that good of a target audience for Bitcoin adoption. If you don't have several thousand, or say $100,000 to put into Bitcoin, it doesn't really matter all that much. So these smaller central banks, yes, they have some money because they are the government. But again, like I said, these central bankers, for the larger central banks, this might be a negative, because these countries are not particularly sophisticated or well run. So I don't know. It's bottom up is probably not going to happen, just because they have so little weight. And a lot of people believe that these countries are marginalized because of the evil US empire. That all needs to happen is the US needs to stop holding them down. The oppressor oppressed. The US is the oppressor, and these foreign countries are the oppressed. That's why they don't get ahead, because they don't have they don't have hegemonic privilege. The US got ahead because of hegemonic privilege. That is absolutely wrong. So these countries are, it's like they make really bad financial decisions inside their countries, but you think that they're going to be sophisticated enough to buy Bitcoin and hold Bitcoin and become major players in this. I mean, yes, there are exceptions like Bukele. There are exceptions, but it's not going to be a general rule at all. I mean, I don't see any other Bukeles around in Africa or South America. I mean, maybe Millet, but they're not like all over the place. So these places usually are corrupt. They're not being held down by the evil United States. They have problems. The US has problems too. So whatever. Let's go on to the next headline. MicroStrategy boosts stock sale to 700 million to buy more Bitcoin. MicroStrategy first announced plans on Thursday to raise 500 million by selling convertible senior notes to qualified institutional buyers. The proceeds would primarily go toward acquiring more Bitcoin for its corporate treasury, which already contains over 214,000 Bitcoins worth 15 billion. The software analytics firm then boosted the offering to 700 million on Friday. The company said the offering is expected to close on June 17th, and today is June 17th. So, well, we should be ready to hear something about this, or maybe even see MicroStrategy starting to buy some Bitcoin. And that's why maybe price bottomed here, because they closed and immediately started buying Bitcoin. I'm not sure, but interesting. This is the speculative attack on the dollar that people have been theorizing about for years and years and years. Oh, by the way, guys, I'm live streaming on Rumble for sure. Let's see if YouTube ever got back up. YouTube is not working for some reason. I don't know why, but I am live streaming on Rumble. Check out the link in the pinned tweet on my profile. Also on Telegram, t.me/Bitcoin and markets. You guys can go over there, join the community, and hang out there. We are live streaming both audio and video over on Telegram. And usually I am live streaming on YouTube. So I will check the comments here in just a second. If you guys don't agree with any of my takes, like my takes just up here on the adoption is going to be top down, not bottom up. If you have disagreements with that, let me know down in the comments. Okay, let's go on to macro. So FOMC keeps rates the same, but their projections have backed them into a corner. So I wrote about this last week, originally on Bitcoin Magazine Pro, and then on this site as well. I said last week, the FOMC released an updated SEP with notable adjustments. Their average projection for the Fed funds rate by year end increased from 4.6%, that would be 3 25 basis point cuts, to 5.1%, or 1 25 basis point cut, suggesting that they don't foresee a severe economic downturn. This is dangerous groupthink, as worsening economic data contradicts their forecasts. For instance, they don't expect the unemployment rate to rise above 4.5%, despite the household survey showing massive job losses in May, diverging drastically from the non-farm payrolls data, including the drop in the labor force participation. So labor force participation dropped by like 0.2 of a point. So that was like, I think it was, boy, now I can't remember which was which. I think it was around 200,000 people fell out of the labor force. Okay. And then there was also another 400,000 jobs lost. So if you include all those things together, it's over 600,000 jobs were lost in May, pushing the unemployment rate to 4.0%, creating a significant job gap. And let me show you this. So right over here is where I'm talking about on the right-hand side here. In the longer run, they don't see anything going over 4.5% for unemployment rate, but we are deteriorating rapidly in that department. So they back themselves into a corner. If they have to cut more than once, it will cause more loss of confidence. Specifically, their unemployment projections seem separated from reality. If I am seeing this, it is guaranteed that large capital allocators see this as well. They know this is garbage, and they're backing themselves into a corner. They will get defensive and bring on the recession. So it's if the Fed had in this range, a bigger range up to like 5.5%, it wouldn't be as suspicious. But if they have this tiny range from 3.5 to 4.5, into the longer run, we're not just talking 2024, we're talking out past 2026. If they didn't keep themselves to such a small range, it would be less suspicious. They wouldn't lose as much confidence, and there might not be a defensive shift. But as people lose confidence in this ridiculous range that's separated from reality, they lose confidence, and it creates a self-fulfilling prophecy that they get defensive and we go into recession. So just not good. This was not a good move on the part of the FOMC. They backed themselves into a corner, and they're going to lose confidence of the public. All right, let's go on to the next headline, macro headline. May CPI and PPI recession signal. CPI came in last week at 0.0%. For years, I've been saying we will return to post-GFC normal for CPI and GDP and other things. If we look at the two charts below, we can obviously see the acceleration really started at the end of 2020 and then ended abruptly in July of 2022. So here is the CPI. Really, we accelerated right here in January of 2021, right after the change of administration. And then it was really high, but then we hit a brick wall in July of 2022. And now we have really returned to this post GFC normal. You can see back here from 2018. So that's what I've been calling. That's what I actually back here. I predicted this back in 2020, 2021. I predicted this return to GFC normal. Oh, this is a little bit higher than I might have thought. And they've been able to avoid recession a little bit longer than I thought. But this is the general behavior that I was anticipating. Return to post-GFC normal. Okay. And on the PPI front, you can see we have significant negative numbers. And PPI, producer price indexes, upstream from CPI. They pass on either higher prices or lower prices. And so you can see this has been negative. It was more significantly negative in May. So that is not a sign of reacceleration in prices. The CPI is particularly concerning to me. Not that I think we should have price increases or anything, but CPI is CPI is directly connected to economic strength. The CPI will fall in a recession. It's not this 1970s anymore, guys, with the the great inflation. And you had stagflation, where growth was low, but inflation was high. That was at the beginning of a credit bubble. We are at the end of a credit bubble now. When we fall into recession, it's a deflationary force, and it will cause CPI to come down. That's it. In our modern and dying model, credit expands at roughly the rate of growth. So you see the target of 2% CPI, and that yields 2, maybe 3% on GDP. You can go back and look, back decades. That relationship is fairly close because growth is inflation in this model. And especially towards the end, you need a lot of inflation, a lot of money printing to get growth. So if you don't want the inflation, that's fine. I'm with you. Inflation is theft. Okay, I get it. But if you don't want that, you're going to have to stomach the crash. So contraction in prices will mean contraction in the economy. And as a direct result, people will lose their jobs, their homes, even their lives. And we might not come back from it. The old idea of Milton Friedman plucking on the string plucking model, where you have a recession and you jump right back up, you have a recovery and you're back on track. Okay, that's not going to happen at the end of a credit bubble like this. Growth slowed. The growth trend slowed after the great financial crisis when everything broke. It slowed then again after COVID, and it will slow again after this recession as well. So we will never come back. So if people lose their jobs, it's going to be perpetually higher unemployment rate. People lose their homes, that's going to be a perpetual problem because we're not going to come back from it for a generation, maybe, because of demographics and things. The U.S. will be better off than the rest of the world, but I care about the rest of the world too, even their lives. Remember that line from the Big Short, Brad Pitt's character in the movie, and he's like, "Don't what was he saying? Don't dance, because they it was going their way. They sold all their shorts or whatever, and then they were really happy about it. And the guy's like, you understand, if you're right, there's going to be like 40,000 people are going to die, because for every point of unemployment goes up, 10,000 people die, or whatever the case, whatever that number was. So yeah, people will die as unemployment goes up and as there's a contraction in prices. So I agree that inflation is theft. But if you want the other way around, then you have to understand that contraction of prices is going to lead to all these bad things, and it might never recover, at least in a generation. So it's a horrible mess we've created. And the only way out with minimal pain is adoption of Bitcoin. So hopefully they can adopt Bitcoin in time and enable a smooth transition over to Bitcoin backing the credit markets. I don't know the exact process of how that's going to happen, but that has to happen, or else we're going to get a major crash and it's going to be bad for everybody. So anyway, okay, let's move on to the next story. Next story is oil glut is starting to get spoken about. That's horrible headline English. Sorry about that. Again, years ago, I wrote about the oil glut we're in and called our situation over the next 20 years or so peak oil demand. Now that idea is starting to make its way into the professional commentary on the space, or the industry, I should have said. From oilprice.com, oil demand growth is set to slow in coming years, and global demand will peak in 2029, while rising production will lead to a major glut this decade. That's from the IEA. I think we covered this on another live stream last week, this particular article, but I wanted to put it in a summary of all the week's data. So while the IEA relies heavily on ESG renewable nonsense, it isn't wrong about demand falling. I think we are likely much closer to a peak than 2029. So maybe we see in 2027, 2028. I don't know, but 2029, yeah, it's only 5 years away, but there's things like gasoline demand in the US has been falling for years. At least the trend has been going down. And the demographic decline is really bad in countries like Japan, South Korea, China, Germany, Italy, Spain. And those economies, the demographic decline in those economies, because it's a global oil price, a global supply. And if the demand is crashing over there because of demographic collapse, it's going to drop the price of oil for everybody. So there you go. Citibank is also talking about this, but they call it supply surpluses. Citibank is turning bearish as well on crude oil in its latest price forecast, predicting Brent crude prices will drop down to $80. Drop down to $60 per barrel for 2025. And they cite supply surpluses and the transition to renewable energies. They always have to throw this in there, but that's not the cause. Okay, so overall, there's going to be weak oil price, generally trending downward. Of course, there can be upswings throughout the next few years, but overall, generally trending down. And if Trump does get elected, one of the big things is he's going to drill, baby, drill. The price is going to crash. If that is the case, $60 will be a very mild target. We talk maybe $40 a barrel. All right, let's move on to the next headline. Copper. Chinese copper mystery solved. I've been talking about this chart for a while. This is from Steno. You can see Steno research down here. And this is the copper stock levels, way out of the normal band. These are weeks of the year down here. Huge stockpile building up. Some people implied it was China preparing for war, but I questioned it immediately as likely their economy being garbage. So this was Andreas Steno here. And he said, China is preparing for something big. And he's showing this copper stockpiles going higher. But I said, this could simply be a sign they're importing normal amounts, but their economy is so garbage they aren't using it. So consumption is the problem. And we got our answer right here. It was the consumption and not the imports that caused this rise in copper stockpiles. However, the rise in stockpiles is what drove the speculative demand comma, pricing up copper. What? I can't even understand my own writing. Copper and much of the conversation around the commodity supercycle. So copper was going higher because they saw stockpiles in China going higher, and this was everyone's initial reaction was they're preparing for something. They must be importing a lot. Okay, they're importing a lot. Look at these stockpiles. This was a sign of demand from China. Okay, and so the price of copper went higher, and people were, know copper as Dr. Copper, right? It has a PhD in macroeconomics because it is such a base metal for our modern economies. So that drove speculation of a commodity supercycle because copper demand looked to be going higher and price then was going higher. Now we see it was actually a lack of economic activity driving the stockpiles, the exact opposite. Chinese copper consumption, stand by. All right. So the Chinese copper consumption is off a cliff. And look at this, just crashing. And where did this peak? This peaked around week 7 of the year. Okay, I want you to see that. Crashed through roughly week 20, and it's still falling, and it's projected to go all the way down negative 40% year over year change. I'm guessing what this is. That's huge. That is their demand for copper. So now we can go back and, that makes so much sense. Why they are accumulating all these copper stockpiles. Because the consumption of it, their economy is so bad that they're not using this in their production. And on top of that, well, lost my train of thought there. Let's see if we have anything else here. Lack of economic activity driving the stockpiles consumption. Let's just take a look at the chart for today. And you can see this hit an all-time high right here. This is a weekly chart. So about a month ago, we hit all-time high on copper. But since this realization that it is actually a consumer problem, that it has started coming back down, I think we might get some support on this previous horizontal support line right here, maybe a bounce, and then it's going to fall back down. I think we're going to see a complete retrace of this whole move. Yeah. Overall, the demand for these things, this is another commodity that the demand is so bad. China needs to build up their domestic consumption so they don't have to rely on globalization as a model, because globalization is breaking down. But they're not. Everything we look at these are all things due to lower demand for commodities, lower demand for oil, lower demand for copper, et cetera, et cetera. That is recessionary. And at the end of a credit bubble, recessions are deflationary. I just want to pound that holistic narrative. That is my holistic narrative for people. Okay, let's go on to the Bitcoin price. So can the Bitcoin price, can it actually go up in a deflationary period? Yes, of course it can. Oh, and by the way, guys, check out my market protons. I haven't been writing these as much because I've been concentrating more on Bitcoin Magazine Pro. But I am coming right back to this, and a lot of that Bitcoin Magazine Pro stuff will be available as well on my own Market Pro. So sign up for that. Check that out. More and more content is going to be coming that way. All right. And by the way, I've been putting those delayed posts onto my website from Bitcoin Magazine Pro, and they are cheaper on my website, but they are several days delayed. Okay. Bitcoin charts for the week here. Price has been painful, but all the massive bullish fundamentals, price has not cooperated. With all the massive bullish fundamentals, price has not cooperated. At the time of writing, the price was 65.8. right in the middle of the range we've been in since early March. I mean, that is just amazing to me that we have been like this. I mean, we're right at the all-time high though, so that is why we have this resistance, significant resistance. Okay, let's take a look at a live chart. So this is the hourly live chart. You can see we went bottom down here at 65,100, and we went all the way up to 67,100. And yeah, it looks strong. It's a little bit of a higher high than this area here, but I'm not going to be convinced of, a real reversal until we get up into, above 70,000. Once we get above 70,000, I think 72 is a given because of this next thing that we're going to take a look at. And that is the heat map. So you can see 72,000 has a massive amount of liquidations that tends to act like a magnet for price. Yes, there are some down here below the price down to 63,000, but this is just so juicy right up here at 72,000. I think we will see the price being drawn up to 72. All right, let me see what I wrote here. Spoke about holding. Okay, on Friday's live stream, I spoke about holding being hard and that this period is going to be very difficult because price is not acting as we expect. Therefore, it requires the ability to hold a dissonance in your mind, that of the immensely bullish fundamentals and the languishing price. There must be something we are missing that is causing price to remain so range-bound. I believe the main driving force to be people losing confidence in their interpretation of Bitcoin due to that dissonance mentioned above. So you have to see all these fundamentals, but how come the fundamentals are not being represented in price? And it's okay if it's maybe a week or two or 2 months, but once we get into the fourth, fifth month of where these fundamentals are not being represented in the price, that dissonance starts growing louder and louder in your mind. And oh man, it's not working. Bitcoin is not behaving like it should. I must be wrong about this. I'm losing confidence in my belief in Bitcoin. And so you sell because to get rid of that dissonance that you're under. The longer price does not go up in accordance to fundamentals, the more they doubt themselves. This causes marginal selling and the price refuses to rise. I don't know why I didn't do that, Telegram. Sorry about that. This is why the holders of last resort are always the floor. They will never sell because of their ultra low time preference and pure belief in Bitcoin. So yes, the hodlers of last resort, they are the ones that will never sell, and they will create the end of the dissonance. So once everyone has sold that can't stand it anymore, then price will start going up. That's called selling the bottom. Moving on to some other aspects of this market, the heat map still showing very juicy liquidations up to 72,300. There are some down to 63,000 though, but we didn't get there, and hopefully we won't. I'll be watching price behavior over the next few days if it can hold the 50-day moving average. And here is that liquidation level from the heat map. And then we're trying to hold the 50-day moving average. And it was at 66,100. And you can see we are above that now. Where were we now? 66,400 actually right now. Okay. Price is also approaching critical historic levels in Bitcoin, or a critical historical level in Bitcoin, the 120-day moving average. This particular moving average was identified several years ago by Willy Woo and then followed by Tone Vays. It's hard to argue with its accuracy. Currently, the 128-day MA is providing support at 64,500. So here we go. Just check out that support, 120-day MA, just support all the way through, and then became resistance on the way down. Once we broke it, bull market, or not, I guess this was a double bull market we had with COVID, but really went off to the races. COVID knocked us down, but then throughout the post-COVID period, that 128-day, again, acted as support. Bounced off it here, back tested, bear market, back tested, bounced off of it here in, I think that was that March? Let me go to live price. Rounding up this moving average so we can see it. Okay. So, but this is weekly. I gotta go daily. All right. So, and we'll go to the line. You see right here in March, found support, broke through it a little bit here in June, but found some support in the general area, broke down below it, tried to break out, finally broke out, and we've been above it ever since. So I do think that we'll find some support on this level like we have. It's been a very important level throughout the history of Bitcoin. So check that out, guys. Let's go back to the report. And that's all I have for price. My Bitcoin protons, market protons. I started calling them protons because I thought they were going to be short, but they got long, just like all my content gets long. And I couldn't call it Pro because I was writing for Bitcoin Magazine Pro, or I am writing for Bitcoin Magazine Pro. So they became protons. That is the story behind the name. Okay, let's move on to Bitcoin mining. Headline: Donald Trump touts Bitcoin mining as final defense against a CBDC. Presidential contender Donald Trump has been in the headlines for his newfound interest and inclination towards Bitcoin. More recently, he strengthened his stance by highlighting the importance of Bitcoin mining. The former president promised to advocate for Bitcoin mining in the White House during a meeting with several Bitcoin miners at Mar-a-Lago. Alongside this development, Trump made a point of emphasizing on Truth Social that he wants the USA to produce all the remaining Bitcoin. This appears to be the reason behind his abrupt support for miners. This is interesting. Of course, a lot of people will say, oh my God, that's so centralizing. You don't want to bring all the mining to the United States. Well, of course not. But this is going to spark competition. This is going to make other countries want to do the same thing if the US is doing it. So, top down. Remember, top down. What's the top economy in the world? United States. What's the top currency? The US dollar. So the top is going to be adopted by the top, and it's going to work its way down. Okay. This is how most things get adopted in society as well. First, things are luxury goods, then they become commonplace. So, anyway, that is very interesting. Trump talking about mining. Hash rate and difficulty. Hash rate has stabilized this week and might be ready to move higher once price also puts in a bottom. So we can see this darker yellow line is the moving average, and it's stabilizing, putting in a low very similar to what we saw in mid-May. Difficulty has gone up and down about 1% over the last three adjustments, but very stable. Mempool continues to be quite volatile this week, dropping 266 megabytes down to 193 megabytes. This can be interpreted as part of my holistic view of the space, as a strong data point supporting the idea that the risk, man, there's a lot of typos this week. Sorry, guys. I'm a one-man show typing this, in the morning, getting it out early afternoon, and then live streaming. So I have a lot of typos, but anyways, I think the ideas get across. So my let me just summarize my view here of the mempool. So as the mempool is rising and fees are rising, there's an increased threat of volatility, increased risk of a sell-off. As prices or as mempool is going down, there's much less risk. So why would this be? Because the market that's full of way more information than any single individual can know. But overall, when mempool is rising and fees are rising, it's saying that the market is sensing something and they want to get their Bitcoins to exchanges. There's some urgency, especially when the fees start spiking. You better watch out for some volatility. So that's what that means. And as the mempool is clearing and fees are going down, the risk of a sell-off is diminished. So right now, that's what we're looking at. Diminished risk of a sell-off. That's what I was trying to say here. All right, let's go on to the next section, layer 2, including token protocols. Before I do that, let me check and see if there's any comments here. I don't think YouTube ever got moving. No, but it says sending data, but it's not live streaming over there. Dang it. But no comments here, probably because a lot of the comments come from YouTube. Let me check Telegram and see. Yep, great. Oh, you like the chart for the 128-day? Yeah, it's pretty great. Willy Woo and Tone Vase, they talked about it a long time ago. I don't know what the exact reasoning behind the 128-day. We were talking about this before we went live over on Telegram, and the idea kind of, well, what did we find out? We found out that half of the trading days every year is 126, but that wouldn't really matter. There's no real rhyme or reason for 128 days that I know of. It was just a back-tested line that Willy Woo found, and it seems to work very, very well. So that's what's going on there. Okay, let's continue with layer 2, including token protocols. I've been saying that these layer 2 tokens, whether you agree with them or not, are where the innovation is happening for the time being. And as time and money are spent around the Bitcoin protocol, perhaps something with longer term practicality will be discovered. In other words, a layer 2 that works well. Yep. And here's an article from quoting several things from Paul Arduino from Bitfinex and Tether. Layer 2 revolution, the role of ordinals in sparking innovation. It's a good article. It goes through a lot of different things. Actually, let's just bring it up. Blockchain.news, never heard of this site. But they go through Pandora's box of layer 2 experimentation. It kind of is. Love them or hate them, the impact of ordinals is undeniable. This is one thing that I've been saying. I personally think they're not good. They aren't going to last. They're not practical. They don't make really any sense. But people can do it. And it is also bringing a lot of attention into Bitcoin. It's bringing attention into the innovation capabilities on top of Bitcoin. And then the rest of this article is talking about all of these different layer 2s and driving innovation. I've never even heard of these things. Build on Bitcoin, Bob, Botanics Labs, Light Tech, Mirror L2, ZK Base, Satoshi VM, Satoshi Sync. So a lot of these things are booming. There is innovation for sure on layer 2, and maybe they'll stumble across something. That's the important message that I want to get across. Okay, next story, layer 2 network Stacks halted for 9 hours. What happened? Stacks, a layer 2 scaling network for Bitcoin, experienced a significant disruption Friday as block production stalled for nearly 9 hours. The incident, attributed to a Bitcoin reorganization or reorg and unexpected miner behavior, sent shockwaves through Stacks' ecosystem and triggered a 12% drop in the STX token price after the past 24 hours or over the past 24 hours. Stacks was built to enable functionality like smart contracts to power decentralized applications, dApps, and NFTs on the Bitcoin network. Since the blockchain itself wasn't designed for such features, the blockchain, the network. It's not a blockchain. I know people call these things blockchains. At least that was the thing to do back in like 2016. These were all blockchains. They're not networks. They're not protocols. They're blockchains. But of course, that is old terminology. I don't know who would be using it still today, but apparently this website. This is Decrypt. Itself wasn't designed for such features that have flourished on rival networks over the years. Okay. So I think we were talking about this on Telegram before I went live on Rumble and Twitter, but this word flourished is wrong. And rival is kind of wrong too, because there is no second best. But flourished also is wrong because, yes, these ideas kind of flourished, but these features really didn't flourish. Okay. If there were real demand, stacks would be used more than Ethereum. But the fact that there is no real use of stacks, there is no real use of Counterparty, which was another Ethereum clone on Bitcoin layer 2. There was no demand for those things. Why? Because there was no magic. There was no pumpability. There was no pumponomics. Okay. That's why the pumping flourished on other networks, not the features. These dApps are garbage. NFTs, garbage. Worthless. I mean, the only worth is separating dumb people from their money. You know, scams are bad because they're fraud. And a libertarian or a person that likes freedom would say the force or fraud. That's what is not acceptable in a free market, force or fraud. Well, all of these dApps and all these altcoins, they're all fraud. NFTs. So, yeah, I don't like them on that part, in that respect. But they're so stupid that people losing money on them, it's like there's still people losing money to very, very ridiculous scams. The Nigerian print scams or whatever other scams there are out there. I've heard a story recently from a friend that I don't think it was her. I think it was like her second degree friend was called and went to like a bank to withdraw money for this scam. And I don't remember all the details, but this was like a upper class person that should have known better, but didn't even see the scam. And so there's people that will never learn, and they will constantly be getting scammed. So is it better? Is it better to have money in the hands of non-discerning people or discerning people? I mean, yes, they're criminals, they're fraudulent, but you know what I'm trying to get at from a very non-moralistic standpoint. These scams, I guess, could serve that function of separating non-discerning people from their money. So anyway, I don't know how I got onto that tangent, but okay, that's it for this week, guys. Check out bitcoinandmarkets.com. Sign up. This is a free weekly newsletter. I'll go over this every week here on Monday after I release these. I have been doing them for 293 weeks, so actually a bit more because I've missed a handful of weeks in there over the years. But I appreciate everyone that supports the show, especially those people that are registered here on bitcoinandmarkets.com for paid memberships. I have a couple tiers that you guys can check out. I've never sold a scam. I've produced good, high quality contrarian content in Bitcoin. And that's it. That's my plug for support. All right, guys. Have a good one. Bye.